Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. It's a happy Friday, the last trading day of the week. What's a very peculiar day this is, as we going to be taking a fresh new look at the financial market. So I welcome you all once again, and in fact we are heading towards a very important day, of course. And in preparation for today's trading session, I have already conducted a comprehensive price action based technical analysis on the assets we are looking at for this week, utilizing simple parameters such as trend lines, key levels, and of course chart patterns to uncover valuable insights into the historical price movement of all of the assets on our watch list for the week. And in fact, we have been monitoring three financial instruments, which are the GBPUSD, the XAUUSD, which is popularly known as the gold spot, and of course the USDJPY, which have been doing pretty well, except for the pound sterling, which has been a little bit choppy throughout the course of the week without no direction at this particular point in time. So we are going to be taking a fresh look in the market in that direction to see how we are going to be positioning ourselves ahead of today's trading session. And there is one thing I normally beat into the ears of people I work with as regards to Fridays being the last trading day of the week. There is this psychological expectation that major key players in the market, or majority of players in the market who had already taken advantage of a significant movement in price action through the course of the week, are likely going to be taking some profit ahead of the weekend. And of course, this can reflect on the chart in the form of reversal patterns or anticipation of price action to move in the opposite direction of prior leading price action. So we are going to be taking all this into consideration while we review the current market structure together today, and of course see how we can capitalize on any potential reversal that could come in along the line. And for those who are joining us for the first time, you're highly welcome on board. And you might be asking, what do we really do here? Well, what we do here is simply come together as a community in anticipation of both the London and the New York session, where we come here to review how well the assets we are monitoring have been doing, and see how we could manage our positions, while we also strategically position ourselves in such a way that we can catch any potential trading opportunity during the London and the New York session. So this happens on a daily basis, 8:05 a.m. UTC. So I would encourage you to be part of the session through to the end, and of course be part of our subsequent session as well. And I promise you, the more time you spend with us, the better you get to understand how things work here, and eventually be able to use the information you have gathered here to make your independent trading decision. And there's one thing I would like you to know prior to the beginning. What we simply do here is to work on the 1 hour time frame, which is basically our execution time frame. So if you do want to have a knowledge of how we got to the point we are on the 1 hour time frame, how we got to get our key levels, our trend lines, and the chart patterns you'll be seeing on the 1 hour time frame, then I advise you to watch my previous video which I did on this asset. So normally every weekend I normally share with the public my plans for the week and how I intend to capitalize on trading opportunities on those pairs. So if you do want to check them out for educational purposes, then you will find the link right in the description box of this current video you are watching. And in fact, they are duly time-stamped, so you can easily navigate to whichever aspect of the video is of your interest. So once again, you are welcome on board, and without further ado, let's dive right into the business for today. So the first thing we normally do here is to check on the economic calendar, of course. And by now, for those who have been with us since we started. You all know how these fundamental factors often manifest on the chart in form of technical patterns and of course price movement. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and of course specific technical patterns, hereby giving us valuable information that will help us in positioning ourselves in such a way that we can capitalize on any potential move prior, during, and even after the event. So we normally focus on high impact event coming in from the economic dockets that affects the asset we are looking at. So for this week, we've been looking at the United Kingdom, the United States, and the Japanese economy. So for today, Friday, August 18th, when we look at the high impact event, we only have one, which is coming in from the United Kingdom economic docket. And this is the retail sales, which is released by the National Statistics, and it is the measure of the total receipts of retail stores. And changes in retail sales are widely followed as an indicator of consumer spending. Generally speaking, a high reading for this data projects a positive scenario for the United Kingdom, while a low reading is considered to be negative. Now, if we look at the data here, this event had already happened. I think it happened about 2 or 3 hours ago. And you will see that despite the 0.6% for the month of June, economists projected a minus 0.5, and that's a clear sign that there has been a contraction in that sector. But unfortunately, this morning we saw a minus 1.2%, giving us a negative deviation of minus 1.53, which is not something palatable for the pound sterling. So we are going to be looking at how the pound sterling has reacted to this event and how we can also use that information to capitalize on the potential trading opportunities for today. So I implore you to stay tuned in so that you don't miss out on that one. Then in order to have a better perspective of what is going on today, I would like to include the medium impact event. Let's see if we can see anything from the United States economy too for today. Now, so I just done that, and of course there is nothing. So the pound sterling is the only major event, economic event that we are going to be looking at for today. So with that being said here, let's dive right into the charts and let's look at things from a technical standpoint. Now, before we kickstart the session, I would like to confirm if the audio and the visual quality of this video is quite good. Please let me know in the comment section. From my monitoring device, things are very okay, but sometimes I don't know what happens. My monitoring device does not pick some things that you pick. So please let me know if the audio is not too good. And okay, I can see a couple of comments here already. Hello, Bill. How are you doing today? Good morning to you, and glad to have you around. Bill wants us to do DXY. Well, since it's not part of our plans for the week, remember, this is what we normally do. We normally follow, but it's okay. I will try and see if I can chip in that towards the end of the session. So if you are around at the end of the session, please let me know and remind me so that I can treat it for your own sake. Then Richard Blackett, thank you very much for your confirmation right there. I really appreciate your feedback as always. I'm glad to have you around too. So with that being said, let me take this as a confirmation that we are very good to go this morning. So I will be diving right into the chart. So as usual, the first financial asset on our watch list for today is the GBPUSD, another very interesting asset that has been a little bit choppy since the beginning of the week. So let's run through what has really been going on in this market. Though we have been buying the GBPUSD, of course, but price action hasn't really moved significantly well, just as expected. And if we consider the fundamental factors in this market, remember last week we witnessed the GDP data from the United Kingdom, which came in on a positive side. In fact, it even was beyond expectation. I think with about 1.2% thereabout on that one. And there was this consensus, especially after the Bank of England's rate hike a couple of weeks ago. There is this expectation that the pound sterling should rise because of the yield and return attached to that instrument compared to the US dollar. Of course, the interest rate on the US dollar is around 5% or 5.25, while that for the United Kingdom is at 5.5. So that margin enough is expected to be an attractive window for investors to come and place the bet on the pound. But since that moment, we are yet to see that significant traction, as price action has been most of the time very, very choppy. So let's look at what went on this week. What did we see at the beginning of the week? So remember, we are doing the 1 hour time frame. If you have not watched my video on the GBPUSD, I implore you to watch it so you can understand how we got to this point. So on the 1 hour time frame, we first of all acknowledge our key level, which was situated at the 1.26700 area. And you know, our key level is what we use to guide our trading activity for every week. Now, if price remains above the key level, we want to be looking out for patterns and structures that will support the idea of buying. While if price breaks down the key level, we want to be looking out for patterns and structures that will support the idea of selling. But in this case scenario, we saw that most of the part of the week price had remained above the key level, which of course supported the idea of buying that asset. So in addition to the key level here, we also had a range which was spotted, as you will see that price action was initially confined within the 1.20750 level and the 1.2226680 area to give us a flat channel to work with. And of course, it further emphasized the level of indecision at that particular point in time. And whenever we have this kind of flat channel, you know how we do it in this community. We remain patient, waiting for either a breakout of the resistant line of that channel to give us an opportunity to buy, or the breakdown of the support line of the channel to give us an opportunity to sell. And so with that expectation in mind, we initially had a sell position triggered for the week, just right below the 1.26680 area. And I think price moved about 45-50 pips in our favor before that bullish momentum began. And since price action climbed above that support line, we had an ascending trend line which we were using to guide our trading activities for this week. And of course, what we agreed here was that as long as price action remains above that ascending trend line, we shall continue to look out for opportunities to buy, while we also look out for ways to maximize potential on that bullish move. And to capitalize on that bullish momentum, we were waiting for a breakout of that resistance line for the week, had the 1.20750, which of course was broken multiple times this week. Though price had remained above that structure, it will move about 40-50 pips. It comes back into the entry at every point in time. So it was more of modest size of profit, or worst case scenario break even on the GBPUSD so far this week. So this further emphasized the level of indecision in this particular market. Now, with the way things are going right now, it is quite clear that price action remained confined within the 1.27800 level and the 1.20750 area to further emphasize the level of indecision at this point in time. Now, with the way things are going right now, we will have no other choice than to remain patient, waiting for either price to break out of the resistance line at the 1.278 to give us an opportunity to buy, or the breakdown of the 1.20750 level to give us an opportunity to sell. I think this is what I would want to wait for here, because I'm fed up of this buy a little bit, price moves a little bit and comes back down into my entry point. Might be a little bit tiring sometimes. So let's wait and see further confirmations to happen. So we have the 1.20750 level, and of course it appears that price action is gradually, sellers are gradually gaining momentum to break through that ascending trend line. And if a breakdown of the ascending trend line happens today, then we are likely going to be seeing a bearish signal in that regard to push price to the downside. And if that happens, I want to see something like this: price breaking down the 1.20750 level and then scale down to my lower time frame to look out for confirmations that buyers are finding it difficult to climb back above the ascending trend line, which of course would reflect on the chart as price action either retesting the 1.20750 or the ascending trend line that would have been broken to incite a sell-off in this particular market. And in fact, we have the 1.26680 level. If broken to the downside, we shall be looking out for more opportunities to sell. In fact, the 1.26680 level is a very significant area to look out for, as you remember that we had an descending trend line, remember, which was supporting the bearish momentum in the last couple of weeks. We identified this on the 4 hours time frame, as you will see. So if price action does break down, then we want to see how the market will react to that trend line to determine if this could be a retest of structure to incite an uptrend continuation. Why? Well, if you look at this area here during the course of the week, we had a breakout of the descending trend line, which from a technical standpoint, whenever we have a breakout of a structure such as this one, we expect at some point in time price may likely come back into that structure to test it a couple of times to incite an uptrend continuation. So that is the logic behind that expectations there. So we are going to be very mindful if price drops to the downside to see how that is. But trust me, of course, I will be with you in the comment section of my TradingView and Telegram platforms to give you updates in that regard. However, in as much as we're looking out for potential selling opportunities here, you know how we do it in this community. We also want to keep tabs with the opposite direction too as well. And to do this, we want to consider the potentials of buyers in this particular market. So what is it that we will see on this chart that will make us change our bias from going bearish to going back to bullish for this for today's trading session? Well, personally, I would say that it would make quite a lot of sense that we wait for price action to break out of the 1.2780 area, taking out all the sell position along this area. Remember that since the beginning of this month, this area has been a very, very strong selling niche, as buyers have always found it difficult to break through that level. So it has been a major barrier for buyers. So I would rather want to see price action take out all those sell positions there, then probably some liquidity in the form of a retest of structure to confirm that buyers are gaining momentum from that area. So that is what I would want to see here before I jump into any buy position on this particular market structure. However, if we look at the distance between where price action is right now and that resistance line, you will see that we have approximately 60 pips to catch. Well, now the question is, are we going to wait for the whole 60 pips to happen before we jump into a buy position after the breakout of that level? Well, let's see if the market will give us signals that buyers are gradually gaining momentum. And this could come in the form of higher highs and higher lows around this area. When we begin to see something like this and consistent buy pressure above that ascending trend line, then we could actually take advantage of some buy position even before the breakout of the 1.27800 level happens, hereby making us to maximize the potential of that move. But if we do have any simple setup that reveals the presence of buyers within this channel, I will of course let you know in the comment section of both my TradingView and Telegram platform. So our center of focus for today still remains within the 1.27800 and the 1.20750 area, and of course we do want to be marking out the zones on our chart, as we shall be needing them as a reference point to guide our trading activities for today. So this is my view here on the GBPUSD for today. So if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, and you can as well use that time to mark out those levels on your chart right now. All right. So, in the absence of no questions, I want to assume that we are all on the same page here. So, in that regard, we shall be moving right into the next financial assets on our watch list for today. So the next asset on our watch list for today is the XAUUSD, popularly known as the gold spot, which of course is my favorite amongst the assets we have been monitoring so far this week. Now, let's look at what has been going on here. In fact, it was quite an interesting 24 hours for us. And for those of us who are part of the XAUUSD live monitoring window on this platform yesterday, were all smiles after the end of the program. So it was quite an interesting 24 hours. Remember that in the last 24 hours, we were expecting some selling positions, especially around the sell window we identified during our morning live session yesterday morning, as you will see here. And coupled with this was the fact that price action had been on a very strong downtrend scenario, as you will see that we have a descending trend line after connecting the series of lower highs. And in fact, this trend line here has been helping us to guide our trading activities for this week, as throughout the week we have been selling the XAUUSD. Then during the New York session yesterday, we had a couple of buy position which was actually triggered. Now let's run through that quickly. So this is what we were saying here yesterday. We said that if price action breaks out, okay, this was where we had during the live session yesterday. If you are with us, you will remember that we acknowledged this range here where we saw buy pressure resume around the 1,892. Then we also confirmed that we had an ascending trend line, as you will see here. So both of the structures was our parameters that we were using to guide our trading activity for yesterday's trading session. And of course, when price remains above that ascending trend line, we want to feel comfortable in a buy position, while a breakdown of the ascending trend line will be a signal to look out for selling opportunities. Now, we saw the breakout of this range here yesterday. Remember, if you remember vividly, we saw the breakout of this range. And at this point, I was considering that we might likely be seeing a bullish bias building up behind the scenes. And one thing I said here yesterday is that we shall be looking out for a retest of structure, then buy pressure will give us an opportunity to join an uptrend scenario, which of course went as expected, and price moved over 70 pips in our favor before the bearish momentum began. And remember vividly what I said yesterday as regards to this particular zone here, which also shares a confluence with that descending trend line we identified during our live session yesterday. Then we also acknowledge that this area could serve as a sell window, as we will be waiting to see how the market reacts to that area to determine if we are going to be adding more buy position to our existing trade or getting ready to sell. And we mentioned that if we begin to see continued selling pressure on our lower time frame, then definitely we want to be getting ready to sell. And that was exactly what happened around that area, giving us beautiful trading opportunities to join a decline. Excuse me, at this particular point in time. And as a result of this continued selling pressure around this area, I mentioned during our XAUUSD live monitoring window that we should be joining a breakdown retest of the $1,897.50 level, and that was exactly what happened. I think a couple of hours into the New York session, we saw the breakdown. In fact, price action came back to retest that structure and gave us that privilege of joining another wave of bearish momentum. As you will see, we also had multiple entries. Remember, we had this level here at the 1,895 broken to the downside, giving us more opportunities to sell. We also had the breakdown of the 1,892, and lastly we had the breakdown of the 1,889 to maximize the potential of this bearish momentum. And as a result of this, we were able to scoop in over 220 pips in profit on this one before the bullish momentum began. And I do hope that you moved your stop losses accordingly, and if you had done that, you must have been taken out with a significant amount of profit. And for those who are part of this trading journey, well done to you for being on standby to have capitalized on that trading opportunity. Now, at this point in time, we shouldn't be in any sell position or any position right now, as we will try to dissect what is really going on at this point in time and how we intend to capitalize on any potential opportunity for today. And for those who are with me on both my TradingView and Telegram platform, you will definitely have gotten an update as regards to how we are going to be managing our position on the XAUUSD for today. Now, let's run through it quickly so that we can see what I said this morning as regards to this market setup and how we are going to be anticipating any trading opportunity today. So this was what I shared here this morning. Hold on a second. All right, so I said here that having gained more than 200 pips during yesterday's session, a resurgence in buy pressure signals intriguing prospects for today's trading. How our focus remains on seeking additional selling opportunity given the persistent position below the descending trend line. A confirmation of the downtrend continuation hinges on a breakdown retest of the 1,892 level. However, a breakout retest of both the descending trend line and the 1,895 level will trigger our search for potential buying opportunities. So let's run through the live chart quickly and see what we said about this area. Now look at the structure here. The first and first I said is the fact that price still remains below the descending trend line. Remember, I highlighted this earlier, and in fact this trend line has been supporting this bearish momentum in the last 6 to 7 weeks now. And you know how we use our descending trend lines in this community. As long as price remains below the descending trend line, we have no business buying the assets at that point in time. Now the same thing is with this scenario here. Price still remains below the descending trend line, and it is likely that this bullish momentum we've been witnessing so far may likely be a retracement of that impulsive bearish leg we saw here yesterday to incite another wave of bearish momentum. Now, where will the bearish momentum start is what we don't know at this juncture in the market. So we are going to be using these parameters to identify that. So now if we bring out our Fibonacci retracement tool and then run it through the previous impulse leg, we should be aiming at an area between the 50 and the 78.6% retracement as an area to look out for selling opportunities. So here we go. Okay, so we have another sell window here, right here, which also shares a confluence with both the ascending trend line and the descending trend line. Let me show you what I mean by this. So we had this ascending trend line here yesterday, remember? Then we saw the breakdown of the ascending trend line. So the breakdown of the ascending trend line is considered to be a bearish signal, and from a technical standpoint, whenever price action breaks down a significant structure such as this one, we expect that some point in time price is likely going to come back, retest the trend line to incite a downtrend scenario. And look at what we have here. It falls exactly within that sell window. Then secondly, we also have this descending trend line here, which has been supporting that bearish momentum in the last 6 to 7 weeks now. So if price action comes into this area, you would agree with me that once it gets into the zone and we begin to see some sudden pressure, reversal patterns like double top, head and shoulder pattern, or falling wedge, rising wedge, sorry, we're going to be getting ready to sell. So we want to be marking that zone out on our chart right now, as we might likely be seeing price get to as far as that point before the next wave of bearish momentum happens. So let's keep this one in mind. Now, with that information in mind right now, how do we intend to do this? So that's one scenario to sell the XAUUSD today. Then another potential of selling the XAUUSD today is this. Now, if you look at this area here, price action had remained within the structure since the early hours of today, giving us a consolidation phase to work with around here. So it shows us that buyers are finding it difficult to find new highs from this area. So if this persists, that buyers are unable to break out of the 1,895 or even come close to the sell window, then a breakdown retest of the 1,892 should the welcoming selling opportunities. Then we can also maximize the potential of that bearish move by adding more positions at the breakdown of the 1,889 and the 1,885 level. So 885.50. So I want to be marking this one out too. So we shall be looking out for more selling opportunities below that structure. So that is how we are going to be capitalizing on selling the XAUUSD for today. Now, in as much as we're looking out for selling opportunities here, remember that we always take into consideration the potentials of buyers too, and that what are we going to see on this chart that will make us negate the idea of selling and join the bullish trade. Now, for me to buy the XAUUSD today, I would rather want to see price action break out of that descending trend line. So remember, a breakout of the descending trend line will be a clear sign that the trend line may no longer have the capacity to continue to negate that bullish attempt. So that's the first signal. And remember, we are not getting too excited here. So we are not joining that bullish momentum right away, as we will need significant confirmations before we jump into any sell position, any buy position at the breakout of that structure. And of course, once we sight a breakout of the descending trend line, we shall scale down into our lower time frame to look out for confirmations that sellers are finding it difficult to drop back below the descending trend line. And of course, this will come in the form of a retest of structure around the 1,895, continued by pressure, after which we want to be joining a bullish momentum. And in fact, when we join a bullish momentum here, considering the fact that price is still within, will still be within the sell window we identified, we want to be on standby to ensure that we move our stop losses accordingly to protect that buy position, as sellers could come in just like it did yesterday to take over the market. So even if we take advantage of a buying opportunity above the trend line, let's ensure that we are on standby to move our stop loss accordingly as price action moves in our favor, so that we don't get caught up in any scenario that will take us out of our position in a loss around that area. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when price gets into that area and how we are going to be capitalizing on any trading opportunity around that level. So these are my views here on the XAUUSD. If you have any questions whatsoever, feel free to let me know in the comment section. So you want to be marking out these levels as you will be needing them as a reference point to guide your trading activities for today. So let's see how the market will play out in the next couple of hours. And if you have questions, so I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the last assets for today's trading session. Yeah, I saw your comment, Adeni Babalola. Good morning to you, and I'm so grateful and glad to have you around with us this morning. Of course, the pound sterling has been very, very slow this week. Sure. All right. So, in the absence of no questions, I want to assume that all I've said so far has been very comprehensive enough for us to understand, and that we are already getting ready to capitalize on any potential trading opportunity coming from this current market structure. So in that regard, we shall be moving right into the last financial asset for today's trading session. So the next asset on our watch list is the USDJPY, and in fact we have not been doing bad at all on the USDJPY so far this week. It has been more of buying the USDJPY, USD against the Japanese yen, and it was not until early this morning that we had a sell position triggered, which of course would have been taken out by now. So let's run through this quickly. Let's run through how the week started for us on the USDJPY, one for educational purposes, then secondly helping us to understand where we are coming from so that we can be able to anticipate where we are going correctly. So at the beginning of the week, we were able to have our key level situated at the 145.00 area. So this was where our key level was at the beginning of the week. And for those who have not watched my video on the USDJPY, I want to implore you to watch it. The link is right in the description box of this current video, and they are duly timestamped so you can easily navigate to whichever chapter is of your interest. So with our key level identified at the 145.00 area and the breakout of that key level, of course, when price remains above our key level, we want to be looking out for patterns and structures that will support the idea of buying that asset. Now look at what we saw here at the beginning of this week. We saw that during the first 10 to 12 hours of the week, price was initially confined within that range, and it was not until an hour or two into the New York session on Monday that we finally saw the breakout of that resistance line to give us our first buy position for the week. And since that moment, we have been buying the USDJPY and capitalizing on very important levels such as the breakout of the 145.540 level. We also added positions at the 145.770 before we begin to see some consolidation phase happen around here to incite a bearish momentum in this particular market. And since that moment, we saw price drop to the downside, giving us an opportunity to sell. And remember, I told us all yesterday that I wouldn't be selling when price breaks down the zone. Let me zoom right in so that we can see things clearly. So I made mention here yesterday that I wouldn't be selling if price breaks down this area outrightly unless we have a retest of that structure. And we saw price drop into the downside. And remember what I said yesterday. I said as soon as price gets into the 145.770, which of course shares a beautiful confluence with that ascending trend line, which all counter trend traders should ensure that they move their stop losses to lock in or secure the current position while they wait out and see how the market is going to be reacting to that zone to determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum if buy pressure is observed around that level. And in fact, what happened was quite interesting. We saw buy pressure resume, multiple rejection of that level by the buyers on the lower time frame, giving us another opportunity to join a bullish momentum, which of course didn't last long, and hereby giving us a lower high, giving us clue that there's likely going to be a momentum shift. Now look at this closely. We saw the highest point for the week at the 146.450. Then we saw this new lower high here at the 146.250 area to give us clues that sellers might likely be gaining some momentum behind the scenes. And we know how we do it. Whenever we begin to notice lower highs, the next thing we want to be doing is to connect them together, as we will be needing it to guide our trading activities going forward. So that is that there. So I just want to keep that on. Then we saw our sell position triggered this morning. We had a sell stop order right here before going to bed yesterday. We had 2 positions running, and I told us this morning that we should be moving all stop losses to secure the current sell position. And if you had done that, you must have been taken out of all sell positions at this point in time. So it is quite an interesting week for us. We've been profitable so far, and kudos to everyone who had been able to be patient enough to be on standby to capitalize on these opportunities. So well done to you for this great feat on the USDJPY. So now today, how is that going to be our plans for today? What are we going to be looking at, and how do we intend to capitalize on any potential trading opportunity today? Now, if we look at the structure close, let me zoom out a little bit. Now you will see how the 145.200, which happens to be our first resistance line for the week. Remember, that's the range we have here at the beginning of the week. We had this range. Then we had the 145.200 serving as a resistance line for that range, and it was a platform for buying opportunity for us as we took advantage of that buy position as soon as price broke out of that level. And since that moment, we have been buying when price comes into that zone, as you will see here. Now price is back into that zone in the last 3 to 4 hours. And one thing interesting that we saw here is the appearance and the emergence of another sign that buyers are likely going to be pushing price to the upside. And not only that, we also have an engulfing bullish candle springing out from that zone to further emphasize the strength of the buyers along that level. So at this point in time, you will agree with me that we are at a crucial moment in the market, where despite the lower highs we noticed since in the last 24 hours, we have seen a bust up for sellers here at the 145.200 as they continue to struggle to break through that level. So will this level now be a platform for another wave of bullish momentum, or will this level be broken to the downside to incite more selling opportunities? Now let's dive into that structure to see and decipher what to look out for around this area. Now there is one thing I would like to call our attention to here, and that is this trend line that you will see here. Now remember, at the beginning of the week, I think on Tuesday's trading session, we had this descending trend line identified, which of course was supposed to be guiding any bearish momentum in the market. And of course, it also helped us to capitalize on a bullish momentum when price broke out of that trend line. Now look at this trend line right now. You see it right here. It's extend further into this area, and since price broke out of that trend line, look at what we have here on Wednesday. We saw the breakout here, and from a technical standpoint, when price breaks out of a structure such as this trend line here, we expect that some point in time price is likely going to come back, retest that structure to incite an uptrend continuation. So if I give a visual representation of what I'm talking about here, so we saw the breakout of the trend line, price action appeared to come back to retest the structure. We saw buy pressure around that area, rejecting that level, also sharing a confluence with that trend line, and we saw an engulfing candle springing out of that level. So for me at this point in time, we might likely be seeing a bullish momentum from this area. But the question now is, how do we capitalize on that bullish momentum if it's going to really happen? What structures are we going to be looking out for? Now, with the situation we have right now, we have the 145.540, another level, very important level that we have used to capitalize on bullish momentum for this week. So what I want to see here is a breakout of this level. If I can find a breakout of this level and retest of structure, something like this, breakout, and then price comes back to retest it, it could go a little bit down anyways. But one thing you want to see here is the appearance of buy pressure. It could come in the form of a double bottom, inverse head and shoulder pattern, or any reversal pattern you can think of to join a bullish momentum from this area. Now, if we are going to be joining a bullish momentum here, we need to be very, very careful, as we have this descending trend line here, which could incite selling opportunities today. So as soon as price action gets close to this trend line, we of course want to be moving our stop losses to secure that buy position while we wait and see how the market participant will be reacting to that trend line to determine if we are going to be augmenting our buy position or getting ready to sell at that point in time. So if selling pressure resumes below the descending trend line or around that trend line, then this could incite a downtrend continuation. And of course, since we have moved our stop loss on the buy position to break even or secure some position, we will get taken out while the sell position will be running as well. Now, that is one way to look at this, but the other one is if price breaks out of that trend line, then it will be a good sign for us to add more position to our existing trade, while we're also going to be looking at another ascending trend line here to see how the market will react to that level to determine if we are going to be adding more buy position or getting ready to sell. But trust me, it might look a little bit complicated here, but I will be with you in the comment section to give you updates on what we are going to be doing around the zone when price action gets into that area, and in fact identify levels that we will be using to guide trading activities along that zone. So these are my views here on the USDJPY if price action ever breaks out and retests the 145.540. However, if that does not happen and price continues to drop to the downside, then a breakdown retest of the 145.200 will be a good scenario for us to join a selling opportunity. So we shall look out for this breakdown, then continued selling pressure to join, then add more sell position if price action goes on to break down the 145.00 level. I doubt if this will happen, but if it does happen, we of course want to be on standby to capitalize on that move. So these are my views here on the USDJPY. So you do want to be marking out these levels on your chart. Very, very important, as you will be needing them as a reference point to guide your independent trading decisions for today. And I think it's on this note we shall be calling it a day, but I will just take some 10 to 15 seconds to see if there are any questions whatsoever before we close in on today's Forex Morning Mastery. So let me take the next 10 to 15 seconds and see if there are any questions. All right. So in the absence of no questions, I want to assume that we are all on the same page here. So it has been a wonderful moment with you guys this morning, and it has been a pretty successful week for us. It's only the pound sterling that really did not move very well for us to significantly take some profit, but of course we were not at a loss on that particular asset. But let's hope that some traction will come up today on the pound sterling, but let's ensure that structures mature before we jump into any position. So like I said earlier, it has been a wonderful week for every one of us in this community, and congratulations to everyone who has been part of this profitable journey. And for those who are joining us for the first time, I hope you are able to gain one or two things from what we discussed here today. But trust me, the more time you spend with us, the better you get in understanding how this works and be able to eventually use the information you are gathering here to make your independent trading decision. So more of you is expected here, and trust me, you're on the road to a consistent, profitable career in trading. For those who find this content helpful and useful in making their independent trading decisions for today, if you have found it useful, why not give this project why not support the project by giving the video a thumbs up? Your likes are very valuable to me, and in fact, it helps the YouTube algorithm to push the video to a wider audience of traders who may find this content beneficial to them. Thank you in advance for doing so, and for those who already liked the project, thank you very, very much for your support. I really do appreciate it. So it's on this note I want to wish you all the best of luck today. Then that reminds me, the XAUUSD live monitoring window is coming up in about 5 to 10 minutes into the New York session today. So you want to be part of that session. The link is not yet ready, but as soon as it's ready, I will be dropping it in the Telegram platform. And that reminds me, if you have not subscribed, please subscribe so that whenever I drop the link or we go on live for the XAUUSD close to the New York session today, you will get a notification in that regard. So on this note, I wish you all the best of luck and hoping to see you right in the comment section of both my trading view, Telegram, and of course during the XAUUSD live monitoring window as we continue to monitor price action. Do have a wonderful day, everyone, and a very beautiful weekend to you too as well. Bye-bye.